If you look at the headlines this morning, they are all about the Fed pivot, this elusive Fed pivot we have been looking for 18 months or more. You can go back to last year editions of this podcast, and you'll hear us talking about it. By us, I mean me. But, first person plural makes it all sound more important. But anyway, that it was enough and to send markets on its way. And as we saw here, as we looked at the indicators, the rally is very broad-based across the board, which makes sense here. If interest rate cuts are coming, it will be good for all these asset classes. Now, I'm going to temper all this. I'm going to throw some cold water on your holiday cheer, just a tiny bit, with a couple of words of caution. This is what one has to do as a contrarian, and here you go. First of all, Powell can always take these comments back, all right? He's done that before. In fact, he's done this before after Fed meetings. In fact, he did this last month after the Fed meeting. His next public comments, he walked back the dovish rhetoric that he had proclaimed at the November meeting, and for a day or so, markets freaked out. So that's one thing. Second of all, just because rate cuts have become a, quote, topic of discussion for the Fed does not mean the Fed is going to cut rates. It just means they're talking about it. Granted, they haven't talked about it in years, so it's obviously a move in that direction, but it doesn't mean they will. Number 3, a lot of this market giddiness is due to the aforementioned dot plot. This dot plot is silly. It's basically a concept that captures these Fed officials, these FOMC members' views on monetary policy for the future, but at a specific point in time, in this case, presumably yesterday. And it has no bearing on actual monetary policy. It has no bearing on anything. It just shows you what they're thinking right now. Again, these views can be expected to change. Fourthly, inflation remains well above the 2% target for where the Fed needs it to be to where they can cut rates. Number 5, the economy is in good shape and it does not need any liquidity injections right now, and probably not for at least a couple of months the way things are going. It takes a little while for these economies to slow. Having said that, we all experienced COVID and it obviously ground to a halt in a day. But that was an extreme circumstance. And then finally, perhaps most importantly, if Powell cuts rates without there being any indications of a recession and with inflation still above 2%, he is going to shoot to hell whatever is left of his credibility and the credibility of the Fed with it.